This is an audio recording of an X Space courtesy of thecoinrepublic.com, the go-to place where you can keep up to date with what's happening in the crypto space.
Take the first step towards online privacy. Get NordVPN.
This space was recorded on 12th of March 2025 and features an interview with Khemani. Kay is one of the team that has brought us PhoenixApp.io, HatchWorksVC.com, SkillGaming.com, and SPECTRE.Exchange. Enjoy. I want to say to everybody who's listening, please don't take anything that we say as investment advice. We're just sharing with you news and information. Do not put in anything, any money, more than you can afford to lose into any crypto project we talk about or any other investment. And you alone are responsible for wherever you park your money. Kay, if you want to come on and say hi.
Sure. Can you hear me? Hello?
I can hear you, Kay. I can hear you. Good to hear you. Thank you. Thank you. Now, I'm going to come to you in a second, Kay, but I do have a disclaimer to make for everybody, right? So, Kay, you are the CEO and one of the co-founders and the team of SPECTRE.AI, which has morphed into HatchWorksVC.com. And I bought into the Spectre ICO in November 2017. The two tokens, SXDT and SXDU. So to be perfectly upfront about it, I'm a holder in the tokens that came out of your project. And you've been on my channel many times, not enough times. And you and I have also met personally for coffees in London. So if anybody has any concerns about any particular bias that I might have, well, there you go. I've laid it all out on the table. So, Kate, thank you so much for agreeing to come on.
Thank you so much for having me.
You're so welcome. So it's always a treat to have you on. Do you want to say something, a little bit of, just a teeny weeny bit about yourself? Not too much, because we're interested in crypto, not you. But we need to know who you are.
Yeah, of course. So yes, the team had their ICO about 7 or 8 years ago. The last decade has flown by pretty quickly. So I'm an entrepreneur and, of course, an investor in the space. We invest in blockchain projects across the board, across the maturity range, right from just pre-ideas all the way to listed projects on major exchanges. And then the large part of our investments are out of blockchain and renewable energy, traditional energy, and some of the more exciting sectors like agri-tech, food, and also AI. So we have under our belt kind of a range of portfolio companies where some of the team, including myself, are advisors to as well. And we are also, the core of our group is all about research. So we look at the industry as a whole. I know Varuni gave a really good breakdown of the macro today. And that's so pertinent to Bitcoin, as much as Bitcoin, the narrative about adoption and the fact that it's anti-fiat effectively, it's the new money. However important that is, ultimately it is impacted very deeply by macro, and hopefully long term it will extricate itself from macro and not have such a high beta to the underlying market. And I think we're headed there slowly. My background itself is in high finance, so I've been in London for the past 25 years now, almost. I studied here, then I started working. I worked at JP Morgan, Goldman Sachs, and then I left and I basically became an entrepreneur. We had our fair shares of ups and downs in entrepreneurship. Have had a few failed startups under my belt, and then one or two successes. And today we basically invest, and we are working on scaling some of our portfolio companies that are also part of our incubator. And that's it.
Yes. And Kay, before we go into the structure of these projects, the crypto projects in particular, I just want to say one of the great things about, and I still call it Spectre, it's no longer Spectre, Hatchworks, is how it has endured. Because there were so many projects that launched in that crazy ICO boom of 2017 that either went bust or turned out to be crooked in some way. You know, people running off with a bag of Bitcoin or ETH. And what's been really, really great about Hatchworks is seeing it grow and grow and grow and develop and develop and develop. And SXDT holders like myself, we receive ETH, passive income, from the profits, from some of the profits that accrue from Hatchworks and the projects that are allied to it. Do you want to say something about how that, actually, you might want to comment on what I've said about the ICO boom and how you've matured, how your project has matured, and then also go into the structure of Hatchworks and the related projects.
Yeah, sure. So effectively, we have been through since 2017, I would say 2.5 boom and bust cycles, so to speak. The current one, I wouldn't say is anything more than a significant or technical correction. I think there is a further leg to go, especially if we look at money supply. Global money supply typically um, precedes increases and decreases in Bitcoin price. I think we have another leg to go on this one. So uh, we have been around for quite a while in this space, and yes, you're right. The projects have matured significantly. We pivoted from SPECTRE.AI, which was originally a financial trading platform, into a yield generation platform, which is now Phoenix. So if you go to SPECTRE.AI, it redirects to Phoenix, and that's a passive yield generation platform. And there's quite a few interesting things happening there. I won't get too much into that, so I don't want to bore a lot of the listeners here, but that's what we did. And then the Hatchworks is an investing group. And so there we look at all types of projects. And we have invested in, I think, over 80 private and public companies across a range of sectors over the years. And yeah, we have, I mean, you've been a token holder as well. We have been paying rewards over time. It has been a very difficult and challenging journey, especially with the difficult markets since 2022. I would say, interestingly, since the invasion into Ukraine, the markets have become very, very tricky. And I think we had a bit of respite towards the end of last year, although the ETFs for Bitcoin were approved in January of 2024. I would say towards the end of last year is when things start to get a bit more exciting after Trump's election and his victory. Unfortunately, because of the tariffs that he has imposed, which is having seismic impacts on a range of sectors, not only in the U.S. but there's a lot of related sectors, connected sectors across the globe, which trade with the U.S. and major U.S. trade partners like the U.K., and that's really, really hurting the markets right now. And the markets have gone into some degree of a shock, and I'm very happy to expand upon that as well to give the listeners some view. I'm sure there's some very, very established people that follow the market as well, so they may disagree or agree. But it's going to be a very interesting remainder of the year if Trump does not move away from his stance on tariffs. Now, today's lower inflation print number. And I realize, Rich, that I'm getting away from your question, but it is so important because ultimately, a lot of
Go
the
on.
people are here to understand what's going to be happening to the price of their holdings, whether it's altcoins or Bitcoin stuff. And it's a very dangerous time for the markets because although today's inflation print was subdued, it was a bit lower than expected. There is a lag, and so as Varuni rightly said, that Treasury yields rose. We typically what would happen is yes, treasury yields would tend to rise as investors go risk on, so they sell bonds. Um, but we also saw something interesting in the market. So Bitcoin obviously rose to 84K, but then it actually fell. It goes to show that there's a lot of exhaustion, a lot of leverage in that market, um, and it's actually not been such a great day despite decent macro. The second thing is there's a lag period. So Trump's tariffs aren't going to percolate. The actual effect of these tariffs isn't going to percolate into inflation for a while. And so, although the market moves ahead and starts to price in this, I don't think the market is that excited today. And we see that with the eventual kind of retracement of Bitcoin as well. But we also see a significant rise in gold. And generally speaking, gold rises when market tensions increase. Um, and so it's actually if you look below the parapet, it's actually a worrying sign that not all is okay in the markets. From a technical analysis standpoint, yes, Bitcoin has dropped an insane amount from 108, 109k to 80k approximately, and the strategic Bitcoin reserve developments have been moving the right direction, but they have been more, I would say, lackluster. Certainly from the whales that move Bitcoin prices, they have been less than impressed by the movements there. So generally speaking, it's poised for further downside in the short term. So from a technical analysis standpoint, we could see further downside with Bitcoin and Ethereum because there's leverage, very significant amounts of leverage because of players like MicroStrategy and other big Bitcoin holders. These wicks can be quite scary. Now, the good news is because you have a different mix of players that are holding Bitcoin now rather than, let's say, 2 or 3 cycles ago, where it was just quote unquote the degens, which would be myself as well, and the whales and all that. Right now, it's more institutionalized. There's more institutional capital coming in through the ETF. So technically speaking, the volatility signature of Bitcoin is changing over time. It's becoming less volatile, but it's so slow that even for retail traders now who are new into this space or that have been there just for a year or so, it's been very painful in the last few months. I can't stress enough, and I don't lean either way. I'm not part of U.S. politics. I know both sides pretty well for many years, but I have to say that Trump's economic policies are very worrying for the space in the short term. They're very worrying for the global financial markets as well, and we need to step outside the blockchain sector to see some very key, uh, I would say, red flags that have developed, which do give investors like myself and should give some of your investors some pause for concern. So one of these is, Jamie Dimon. He is arguably the world's most powerful investment banker, and he has sold almost all of his stock in JP Morgan in February. There was an SEC filing. It's not all. It's a big, big portion. It was almost $240 million worth stock. And he had announced this already in October of last year, approximately. So everything is legal, what he's done. But these people, generally speaking, JP Morgan, banks like this, Goldman Sachs, they are what you call systemically significant banks to the global financial system. Yeah, it's not some kind of Timbuktu bank from the Netherlands or anything like that. Nothing against Netherlands, but these are banks that dictate policy in Washington as well, and they don't bet on financial futures; they create them. Generally speaking, I've worked at both, so I know a little bit about this. And when you get the head of JP Morgan selling, then of course, the reason officially was given was estate planning, all of that, and that may be true. But also it means that his internal committees, the macro committees that basically dictate how the bank not only situates its high net worth clients through its asset management wings, but also what type of proprietary positions it takes, long, short, etc. They have given him the red markers, the red flags that listen, the market is a bit overvalued. The risks are to the potential downside. So you can probably go all cash and then rebuy later. It's like what Warren Buffett does. I think Warren Buffett's Berkshire Hathaway is also a very large amount in cash. Don't quote me. It's a very large amount. I don't want to say something like 100 billion, but it's a very large amount. They're obviously waiting for a big draw. Now, since that sale of Jamie Dimon, and there were other CEOs as well, by the way, that sold of major banks and top directors there, and the SEC luckily lists all of this. Since then, the S&P is down approximately 5 to 7%. Obviously, it rose today because the inflation number was better than expected. But the thing is, it's actually a token holder of mine, Nick, is telling me it's 300 billion in T-bills from Buffett. And remember, treasury bills is like liquidity. It's like cash. And he keeps it in T-bills because the banking system has risk. So Berkshire won't store all this money in banks because banks don't insure it. The T-bills are very liquid. So they have immense firepower waiting for a big stock market drop. Bitcoin is not immune to such a drop. Okay, so this drop is going to happen. I hate to be the bearer of bad news. And yeah, look, sure, Bitcoin could bounce up to 110K first before it drops, but there is a structural drag. We are due for a correction. It's been a long time coming. A lot of money was printed during the pandemic, but if you look at the global economy, it's out of step. Geopolitically, it's out of step. What's happening in the Middle East? What's happening in Russia and Ukraine? The U.S. administration has, disembarked from its traditional Western, I won't say Western value system, but it's a different value system that has kept it close to Europe and NATO. It's changed its stance, and time will tell if that's a smart move or not. But in the short term, volatility and risk has gone up in the market a lot, the risk metrics, and that doesn't bode well for crypto in the short term. In the long term, we all know that Bitcoin will be at a much higher level than it is now. So I guess what I'm saying is that, but we're also doing this as well, and we're not happy to do this, but we have to. We have cut costs significantly within the firm to become more lean. There's another 10 to 15% more fat across the portfolio to cut if things get worse. But going back to crypto, to Rich, what you said about we have endured.
Okay, hold on a second.
Yeah, sure.
Hold on a second before we go into talking about the projects, to answer the question that I originally asked you, right?
Yeah.
First off, thank you so much for what you said. That was fascinating, absolutely fascinating.
Sure.
And what I appreciate is, people who are listening may not know about Kay's background in banking, looking at all sorts of indicators, dealing with millions and millions of dollars of investments. And so you bring that experience and knowledge to bear. What I want to know is where are the major supports for Bitcoin, and
Yeah, absolutely,
where they likely to be, and when? When and where are the major supports?
Absolutely. So that's the good news. So it's like, I thought I'd get the bad news out of the way, and then I can kind of just give me 1 second, which I always do. So the thing is that technically right now Bitcoin has bounced actually just very recently when it just hit 77.5 or so off of a major weekly support, and we should see a short-term bounce. And I think with today's easier than expected inflation data, we could see a bit of a bounce back to approximately the kind of 85, 90K level. If we get lucky, maybe even close to 95K. And normally I'm not a 50-50 type of guy. I give better probabilities, but the thing is, it literally is 50-50 at this moment because Trump has literally nuked the markets, and it creates a lot of uncertainty with these tariffs. These are major tariffs, and they feed in and can create massive inflation. So that's the issue. That's what the market is trying to quantify right now. So here's the thing. In answer to your question, we should see a bounce because Bitcoin has fallen from 108 all the way down to 80 almost too quickly. So by traditional indicators, if you look at relative strength index, just keep the macro aside, if you look at the various timeframes, it's no longer overbought, which is good. So we could see a rally. That being said, I would say the absolute support, and I mean this on a wick, like it could just wick down because there's so much leverage in the system. Technical support, your traditional moving averages or support and resistance levels, R1, R2, R3, for those of you that are traders that look at resistance levels and support levels, they don't really apply because Bitcoin tends to overshoot in both directions. And the reason this is happening is leverage. So we would probably see Bitcoin, if it continues the downlift at 70K, but it could also wick down all the way to 63K, 63 to 64K. Wow. Yeah, that's how painful it could get. And to put things into perspective, when the ETFs were approved, that's the seminal moment, right? That's been approximately 1 year ago. Bitcoin, from memory, was at approximately, I think, 40K or something. And so since then, it's almost done close to 2.5x or so. It's blowing off some steam. It's healthy for the market. This recycling is important. It resets expectations. I don't think we're going to see 63K. I'm just saying that we have seen crazy drops before in this asset. And I'm not going to say this time it's different. If things get really bad, we can see 63K approximately. Most likely it won't get there, but I do think we will see in the 70 to 75K mark before we see our next leg up for Bitcoin. And in this specific cycle, because it's just beginning, if you think about it, I mean, if Trump hadn't kind of come in and done all this with the tariffs, which has, systemic impact globally, and then of course being more Russia leaning, this throws a spanner in the works because the market has a lot of information to sift through and digest. That's why there's a lot of volatility. So for traders, this is going to be great that know what they're doing. But for people who don't know how to trade, the best thing to do is to just hodl through this and yeah, just dollar cost average, use the opportunities to buy more. Again, it's not investment advice, but so in 2022, to our community, I used to say the Maginot line was 30K. Anything below 30K, and we would see a structural drop. And I think in 2022, it did actually break the 30K. It fought it very well, but it broke. And once it broke, it went all the way down to 15K, 16K, that kind of range. This time around, because you have the ETFs, you have so many financial advisors across America, so many investment banks, you have Bitcoin regulation favorably developing in many nations around the world. You have more support. You have much more support, right? So I'll give you an example. BlackRock and Fidelity, they have their ETFs out there. They're the biggest ETFs. They have a range of financial advisors that work for them. They've gone to them, and these guys are shilling not BlackRock. They're shilling Bitcoin hugely to their client base, which consists of high net worth individuals, retail investors, institutions, and what have you. But when Bitcoin was at 100K or 105K or even 90K, there's a lot of smart money out there. They said, look, we know how the story goes. Bitcoin always drops. We're going to wait. So they've set their orders with the brokers, their pending orders, their limit orders at much lower levels, at 75K, at 80K, 70K. There's a lot of support. That big money, even guys like Michael Saylor, who is now issuing, I think, was it 12 billion worth of stock or 20 billion or some crazy amount to buy Bitcoin. there's a lot of support, which wasn't there in the previous cycles. So it's not something that's going to tank to like 60, 50, 40, 30K, right? These levels, I don't think we'll ever see below 60K ever again in Bitcoin, ever. If we're lucky, we may never even see below 70K, but I have my doubts on that one. And then we should get to approximately, if things go well, again, this is not investment advice, but just looking at the technicals, I would say approximately in the 110 to 120K range, if things progress well, by approximately the end of this year, Q3 of this year, calendar year. And then again, this is so dependent on US policy and what happens. The good thing is Trump is vain and he likes to be able to boast that he's done a good job with the equity markets, he's done a good job with the US economy. Right now, they don't like what he's done with the tariffs. So I think possibly there's going to be a softening of that stance as time goes by, a reversal maybe even, because Trump is very astute in that respect. He'll get enough feedback from the markets that, hey, listen, you've caused a drop of this much amount in S&P. This is horrible. We got to do a 180. So that should cause a big pump. And then there are other factors as well, the Bitcoin narrative and all that. So I think that's the kind of range we should see towards the end of this year, maybe early next year, for Bitcoin hitting new highs, kind of in the 110, 120, 130K range. There are people that say that's it for this cycle. I think from my perspective, and I'm sure there are others here who may agree or disagree, but I think we're probably, if things go well and there isn't a kind of a thermonuclear war and things go insane with Russia and Trump completely destroys the economy and all of that, we don't have like a Six Sigma event. I think with Bitcoin now that ETFs are in play, I think we may enter a kind of a super cycle, if that makes sense. So if you look at Bernstein Research and you look at some of the heavyweight houses, they have some pretty bullish price targets for this cycle. So 2026, 2027, that type of level of Bitcoin at 250K, 300K. I don't think that's impossible, but a lot of things would need to align for Bitcoin to get there in the next 2 years.
And just on that,
sorry, please go ahead.
Okay, just on that, what you're describing is not what's typical at this stage of the 4-year bull cycle, because typically Bitcoin has in the past reached an all-time high around about 35, 36 weeks after the halving, which would bring us to an all-time high in October, November, a new all-time high, and then it would go down for about 12 months. That's what's happened in previous halvings. But you're talking about the tariffs causing such a momentous dislocation in the money markets that even Bitcoin's halving pattern is disrupted.
I would say, I mean, if the halving pattern shows Bitcoin hitting an all-time high in October of this year, then it does kind of align with what I just said in the sense that by October, November, we could see 110, kind of 120K.
Right.
So I think we're on the same page with that. But I can't stress how systemically significant these tariffs are, because he's gone against traditionally very strong Western trading partners with this, and these are very hefty tariffs. So the issue basically that has a big sort of specter that has kind of hovered over the whole, I would say, general investing narrative over the past 2-3 years is, can the Federal Reserve get inflation under control? It's been a big sticking point, and they've done a really good job until Trump came into power. And it's not saying that Trump may ruin everything, but bringing these type of tariffs into the U.S. macroeconomy doesn't augur that well for Bitcoin or for any risk asset. And Bitcoin is a risk asset. Gold is a risk off asset. So gold would do well if everything goes to tits. But right now, the thing is that, yeah, absolutely. If inflation comes back into the system and the Federal Reserve has to crank back the taps on, or tighten the nozzle, so to speak, on rates, that's horrible. I mean, that's the last thing we would need, as that could create a situation of trying to get inflation under control, but then also the economy tanking. And then you have what is stagflation, with inflation and economic contraction. And that's the last thing you want. I don't think Trump is going to let that happen, but I'm not understanding the whole point behind the narrative, behind the tariffs. And
okay. Yeah. Just on that, my understanding on the tariffs is there was a guy, President McKinley, who the US had tariffs under him, and what would happen is there wasn't an income tax. And I think Trump's idea is to get rid of domestic taxation, which would free up Americans because they'd have more money in their pockets to invest, start up businesses. But where the government would generate income would be from tariffs. And my understanding, because as you know, Kay, what I do for a living is I'm a child protection social worker, but I've learned about finances through listening to you and through being in this space, is what the tariffs would do is they'd impose charges which would lead to greater inflation the whole world over and completely disrupt the existing global patterns of trade. And then what traders and the money markets want is they want certainty, that some idea that how things are going to play out over the next few months or so. And Trump coming in saying, okay, we're going to have tariffs on the 2nd of April or whenever they start, is like, oh my God, we don't know what's going on. And the plans that we had in place, they're not going to get fulfilled. Is that, would that be a fair estimate of from this layperson, a social worker, about how it's going to play out?
No, I mean it is definitely a fair estimation. I think with McKinley, the thing to note also is, and Trump's guard, so to put it, his coterie, the people around him, they are more old school, the traditional Republicans, etc. So they draw inference and strength from historical periods. I think what, just to put a bit of reference for the people that are here, McKinley's tariff system kind of dates to, I believe, not even in the 20th century, right? So this was towards the end of the 1800s. And the U.S. relied on import tariffs as its main source of government revenue before income tax was introduced. And this so-called McKinley tariff raised import duties to, I think, 50-60%, aiming to protect American industries and generate revenue. The outcome, there was indeed a short-term boost to domestic industries, and when that happens this time around, especially with Trump getting a lot of investment from abroad into the U.S., the Stargate program as well for AI, factories being built, he's going to come out there, pumping his chest and saying, "Look what I did." But even under the McKinley system, you had higher consumer prices due to lack of foreign competition. It hurt the U.S. farmers. Foreign nations retaliated with tariffs on U.S. agricultural exports. So they're going to do the same this time as well. And it led to obviously a major political backlash. I'm not sure who was then elected after that. With regard to Trump's plan, the nuances are Trump has suggested massively increasing tariffs, I think up to 60% on Chinese goods, and universal import tariffs. And I don't understand this. It's like a one size fits all. But anyway, that's his plan. He wants to indeed, as you said, reduce and eliminate personal income tax, which is good. Well, prima facie that sounds good. The pros, I would say, are it could protect U.S. manufacturing jobs. It could certainly reduce dependence on foreign production, and that's really good, especially after the pandemic. We saw the chokehold once China was shut down. What impact that had? Producer price inflation went through the roof because people just couldn't source certain parts. And it could generate substantial revenues if import levels remain high, and that's a big if. The downside is higher prices for U.S. consumers in the form of tariffs. They act like a hidden tax on imported goods because those people still have to pay higher prices effectively for these goods. And then, of course, there are going to be retaliatory tariffs across the sector, auto sector, certainly from the Germans, agricultural, tech, you name it. And so this is the concern that if inflation then does creep in, what does the Federal Reserve do? Can the boost in domestic growth offset the inflationary pressures? That remains to be seen. So I think if implemented strategically, the tariffs could boost U.S. industries. You're absolutely right. They could reduce reliance on foreign goods and fund government operations. But if they're too aggressive, they could also backfire by hurting consumers' businesses. And in general, just make the U.S. look like a protectionist economy. Here's the thing: we don't know how this is going to pan out, but the thing is, it's very disruptive. It's been almost 130 years since this was tested. We live in a different economy today. The geopolitical economy has changed as well. Everything has changed. Information travels much faster. The market is still trying to make sense of this, and as long as the market is undecided on what impact this is going to have, and the impact of this is going to percolate over time, they're not going to be buying Bitcoin. They are, but if you want a sustained rise in Bitcoin, you need good news. You need pressure to be released in the system. And that was happening. I mean, you saw Bitcoin rallying so much after Trump came in, the talks about the strategic business reserve, Trump being pro-business and all of that. I think what has happened right now is this is a bull in a china shop move. It's happened very quickly, and it's confused the markets. And in my opinion, it is difficult for the markets to digest this. They will be watching every single inflation print now like hawks. Like today, if you saw the Bollinger Bands, the ranges, they compress significantly in gold, which is a big asset when it comes to inflation, and it moves a lot of inflation. And Bitcoin as well. Everything became silent. It's like the world froze before the CPI number, and then everything started moving again. So when you get this type of correlation increases ahead of key macro data points, it goes to show nervousness in the market. And Bitcoin doesn't generally thrive in nervousness. Gold thrives. And I'm not a fan
Right.
of Peter Schiff and all of Nouriel Roubini and these guys who keep saying Bitcoin is dead. No, I believe Bitcoin is the new gold. It's digital gold, and I think Bitcoin is going to hit $1 million. Believe it or not, I think by 2030 it's possible. As you know, DALP is long. We love Bitcoin. It's a fantastic thing. But there's a lot of shit that's happening. And there's too many cooks in the kitchen as well, I think. And there's a lot of data points. And gold has a very clear use case, and it's built its reputation over so many years that it's reliable. But therefore, it also only goes up 1 or 2% every month. It's very boring. Bitcoin has a more murky next few months ahead, I would say. But long term, I think as long as we get more clarity on the impact of these tariffs, I think then it's free to rally.
Yes. No, thank you. And gold is established. It's settled. It's the foundation of every single asset, the foundation of money, everything. And Bitcoin is just this new kid on the block, this upstart, not yet tried and tested. But I agree with you. I think in the long term, I think Bitcoin is going to do very, very well. Okay. Well, look, I know you have a hard stop just before 6 o'clock. You haven't said anything about your projects. You did say this thing called DAO. Do you want to start off by saying what DALP is? And then also, please do include where people can find out more about these projects.
Oh, yeah, sure. So, they can always join our Hatchworks channel. We discuss all the projects. We have a portfolio gaming company. I think they're also on here, Skill Gaming. That's basically a company that provides services to upstart blockchain projects that are into gaming. So it's a whole game design team that develops games, develops entire platforms that have pay to win, pay to earn features embedded in there, integrated with all of the most of the EVM wallets. Quite a decent roster of clients there as well. So anyone is here, they want to discuss gaming and their new coin or whatever, get in touch with Skill Gaming. The DApp is just it's a decentralized liquidity pool that invests in anything that potentially makes money, and then the proceeds from that are paid to token holders as and when those investments mature. That's it. And right now, what's kind of has us excited internally is we've been developing over the past 8 or 9 years algorithms, financial trading algorithms. Through no luck for almost 6-7 years, but then there was a small breakthrough during the pandemic, and we kind of looked further honed into that. And we're going to be launching those algorithms that are trading major assets, including Bitcoin, including gold, including the S&P 500, long, short, market agnostic, and with the view to beat the markets. Initial results look good. The tests are all kind of clear. We have live money on them, and we're going to be launching them through Phoenix shortly.
Right. Now, Phoenix.app, Phoenix.app. And this is one of the newer projects in the Hatchworks ecosystem. Now, my understanding is it offers returns to people that lock their USDC within Phoenix app. Is that correct?
Yeah, so it basically makes them liquidity providers on Uniswap. That's kind of what Phoenix does right now. We have 3 pools of risk. The highest risk pool, which generates anywhere from kind of 20 to 30% return on year, but your capital is at risk. When ETH prices go down, that goes down as well. And then we have we have 2 lower risk pools, which are a bit more popular now given what's happening to the markets. What we're doing is that's kind of the Uniswap, the decentralized market making service that Phoenix provides. We're now adding a layer on that for people who have no interest on the decentralized side of things, and they just want to make a stable income every month or every quarter. And so this is a long short series of bots that we have developed that trade at major regulated brokerages, only regulated brokerages across the world, mainly FCA regulated or SEC regulated. And they have a certain amount of risk parameters that they can set in terms of how much drawdown they're willing to endure, and then what type of target return. So that's what we're going to be launching through Phoenix.
Right. Okay. And then the profits, some of the profits that accrue from that, from the fees that you take, go into the DAO, the decentralized autonomous liquidity provider, and actually fees from some of the other projects and investments that Hatchworks projects make go into the DAO, and then
Yes.
holders of SXDT, such as myself, receive a share of the fees from the DAO as rewards paid out in ETH on a regular basis. So
Yes.
just so people know, that's how it's structured, right? So you've got Phoenix app going into that. You've also got, I got to tell people the story about Spectre.exchange. So
Sure.
Kay and I have over the years had face-to-face conversations, online conversations when he's come on my Crypto Rich channel, but also offline conversations, and then conversations within the Telegram group, the Hatchworks Telegram group. And they've been really, really great. And one of the things that Kay has bemoaned, rightfully, is the amount of shenanigans that goes on with it in the crypto space, but also within exchanges. You know,
Yes.
exchanges running off with people's money being hacked. What was it Quadriax? The owner
Yeah.
disappeared. We don't
Yes.
know how many Bitcoin and ETH just gone. Exchange shut
Yeah.
down. He's gone. And so,
Yes.
and then you refused to pay exorbitant fees for exchanges and market maker fees. So then you set up your own exchange, Spectre.exchange, fully KYC, fully regulatory compliant. And I think that's the only place where people can get SXDT and SXUT. And it's not open to US investors and a few other investors. So you're like, was it? There's too much out of integrity and corruption in this space. We're going to set up our own clean vehicle. And I think some of the fees that accrue from Spectre.exchange go also into the DAO. There's skill gaming, formerly known as Betverse, which is where people can play computer games with each other or against the computer and earn rewards. You can earn real money, like real crypto money, and which you can then convert to fiat. And then
Yes,
some of
indeed.
the rewards from that go into the DAO. And there's also solar oil and chaos. Do you want to mention those briefly in the few minutes that we have left?
Yeah, so solar, oil, and chaos. Chaos is actually listed on Spectre Exchange. These are oil projects, energy projects, and they basically uh, produce oil from rigs, and the the proceeds of that, when that oil is sold on the spot markets, are repatriated to chaos token holders. So it is a DALP investment that has been paying now for a few years. It had a difficult year last year. It has now recommenced after they changed operators. Uh, and yeah, that's for those who are interested in getting sort of energy exposure.
Okay, you've just gone on mute. I think it was going to say for those interested in getting energy exposure, and I got to
Sorry,
confess,
yes, please go ahead.
okay. Well, I was going to say that I have solar oil as well. I've put some crypto into that as well, and I've been getting passive income from that. And then some of the income from solar oil goes into the DAO, which is then some of those proceeds are shared out with SXDT holders. And then one of the things that I appreciate about the way that you and the team have managed these projects is slowly, 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 slowly. While everybody's like, oh, I want Lambo now or Lambo tomorrow, Kay and the team, and I think this is a Goldman Sachs motif, long term greedy. Slowly, slowly get all the foundation in, and we're playing a long term game. Is that right, Kay? Long term greedy?
Well, I think, well, yes, yeah, I think that's a fair statement. I mean, it's just basically it's important to build up a proper foundation and scale correctly. And yes, there are some good crypto projects as well. I think with crypto, as you have seen for the last 7, 8 years, 90% just come and go, and they're in it for the wrong reasons. And there's some that are in it for the right reasons, but they just get the scaling wrong or the timing wrong. And it's a brutal market. It's a very, very brutal space. And now with AI replacing jobs as well, and the cost of marketing that has shot up significantly, it's very difficult for a startup, especially in crypto, to scale. It's very, very difficult to get the word out there. And so, yeah, and then if you want to do it the honest way, it just takes longer. It takes a lot of time. You have to actually build something and acquire users and really get users, focus on retention um, and and growth and defending your market share as well, which means you have to have certain USPs in place. that can't be replicated by competitors. I think with crypto, it's all about the narrative, the story. The story always sells, it always runs up ahead. But then you have some good projects like Chainlink, which have delivered the story as well, but have also real world adoption. Some would argue Ripple is one of them as well, in some way as well. It has banks kind of using their technology. So there is a few good projects out there as well. But yes, you're totally right. You know my stance on altcoins and kind of where that's headed long term.
I do it, and sometimes I'm like, Kay, I should have listened to you. I should have listened to you. I should have listened to Kay. But no, well, live and learn.
But I'm just bearish. I'm just quite bearish. So yeah, it's always painful to listen to me. But I'm bullish long term, but it's short term generally bearish. So yeah.
Absolutely. But also, one of the things that Hatchworks VC does is with your team of investors and researchers, you invest, like you said earlier, great projects in the crypto space, but also in the legacy space. Because I know Hatchworks has in the past invested in Nestle. You also invested in Binance and other crypto projects. And then some of the returns that are made from those investments also go into the DAO.
Yes.
Okay.
Yes, that's correct. Yes. That's what there's a part of Hatchworks which does that. Yes. And recently, there's been a renewable energy investment as well that was made a few years ago. That's being incubated. That's going pretty well, pretty decently. And if things continue, given what's happening to renewable energy in Europe, especially after the energy uncertainty situation, after the Russian invasion, that's a good space to be in. So yes, we see how that kind of goes and what type of rewards that generates for token holders.
Very good, very good. Well, I just want to say, in the minutes that we have left, few minutes that have left, if anybody wants to ask a question of Kay while he's here, he's not going to stay long because I know he's got an appointment at 6 o'clock, so I want to finish with him a couple of minutes beforehand. And while we're saying that, do you want to say something about AI and how Hatchworks is positioning itself with regards to AI?
Yes. So we use AI since October, I would say maybe September of last year, sorry, pretty extensively in doing the correct research for our algorithms. We basically hypothesis test technical strategies for gold and for Bitcoin. And we test it on a small sample of data. Then we do a range of statistical studies on it, like Monte Carlo simulations in a controlled data set. We test it on unseen data and forward test it on live data. And if that holds true, then we actually take it to the larger kind of testing lab where we have some industrial strength tools. And we basically run it through time, almost 10, 15, 20 years on a range of assets. And then we develop algorithms based on these initial AI findings. So and when I say AI, we're using GPT, an enterprise version. It's very, very powerful. For those of you that haven't embraced GPT or are using it mainly just for maybe conversations or essay writing, it is very, very powerful in market analysis as well. If you are traders, you can just drop a chart into GPT. It'll analyze it for you, but it'll also give you the macro behind it. And so I think it has a lot of untapped potential. And so we're working on that on the side as well. And if things go well, we think we could launch a commercial product under Phoenix for traders around the world to use, something that predicts with a good degree of accuracy what Bitcoin or gold, those are our top two assets, what Bitcoin and gold are going to do in the next few days with a good degree of accuracy and also giving the reasoning behind that. So we're working on that on the side. Right now, we're using all of that for our algorithms. But hopefully within a year's time, we're ready to kind of see some good developments there so we can launch it.
Okay, that's just incredible what you said. And again, I want to highlight the slowly, careful, deliberate work that you and the team are doing, not rushing anything into anything. It is like you're building a digital temple. When you craft a temple, you've got to be really, really careful. You've got to make sure as you're laying out all the bricks that everything lines up and everything looks good. So it takes a great deal of care. Couple of things I'd say to you, Kay. One is, actually, maybe say three things. One is you have to come on my channel. Two, you have to come back on the Coin Republic at some point. And
anytime.
Three, really, really appreciate you sharing your wisdom and your knowledge and your perspective. Really, really appreciate it. Thank you so much. It's always a delight to talk to you. And I'll reach out to you shortly after this anyway, privately, about another matter. But thank you
for having me.
You're free. You're so welcome. You're free to go. And for everybody who's listening, thank you all very, very much. I think this is the third one that I've hosted, and I'll be hosting. And thank you to the Coin Republic, thecoinrepublic.com. The next one will be on Saturday, the 22nd of March at 4 p.m. UK time. That's the next one that I'll be hosting with another fabulous, fabulous guest who'll be talking about crypto and money and finance. So please make sure that you follow thecoinrepublic.com. Oh, and the Hatchworks Telegram channel is, let me just have a look. Oh, I don't know what it is. Okay, do you want to say what it is, the address, or the skill gaming one is easier to find, I think.
It's just the Hatchworks. It's the Hatchworks social channel. I don't have the link, but if you just search for that in any Telegram, I think you'll be able to find it. If not, I'll just send you the link, and then you can share it with the Coin Republic people.
Yeah, the Hatchworks social channel on Telegram. You'll find me in there. You'll find Kay in there, and some of the other team from Hatchwork. Also, skillgaming.com. They have their own separate Telegram channel. You can check that out. All right, Varuni, thank you so much. Thank you, Kay. Over to you, Varuni.
Thank you.